Good morning, Paul Georgi from Allendale. It's May 10th, 2010. The excitement this morning is the EU's bailout package of 1 trillion euros of the European community, and I think that will carry over in a lot of markets here this morning. We've got the dollar down anywhere from 80 to 100 points, crude up 250 to 300, and gold is down this morning anywhere from $15 to $16 as we speak. It appears like the investor confidence is coming back into the EU. They've got the confidence is moving away from the gold and out of the gold into other commodities, and I think that will carry over here this morning. And as this package unveils and we go into the rest of the week, this will continue to dominate the news and the direction of the markets. From the fundamental perspective on corn, we're calling corn anywhere from 2 to 5 higher here this morning, basically rallying off of the news out of Europe. And the corn market last week fought off some very negative news and yet closed near the higher end of its range, basically from demand. It shows that we've got some demand coming in here. China is lurking in the weeds, so to speak, and the old adage that the cure for low prices is low prices, and we've seen that develop here the way it looks as demand for corn export sales continue to show be very positive for this time of year, and I think that will continue to dominate the market here today. We do have a USDA supply demand report tomorrow. We'll be focusing on what kind of ending stocks we've got for this year and some of the projections for next year. So check with Allendale Research and get the full details on that. The weather, not a lot of frost damage. There's been frost damage in some areas, but most areas were escaped the wrath of this cold weather. In the soybeans, 4 to 7 higher is what the call is right now. Short covering, I think, is the main factor there. That market in the July contract broke 39 cents last week, and we'll see some short covering. The July beans, for instance, have got support around the 950 area, 949, and resistance around 970, 975 area here today. Over in the wheat, that's been a technically traded market. It closed off of its highs on Friday, but still a very positive close. It is just below the 100-day moving average at 516 and a quarter, while the 200-day average sits at around 534 here today. We're expecting that market to open higher as well. Over in the cattle, good news there. I think the stock market being very strong, and you look at what caused the weakness in the cattle last week was the negative tone to the stock market and what was happening on Wall Street. We expect that to be reversed here today. We should see some more strength there. Cash markets have been positive. We had $100 cattle last week. We expect that this week again, and maybe even a little bit higher if we can get support from these outside markets. Choice beef yesterday or on Friday was up 35, select up 7. The pork complex had cutout values down slightly there, and expect to have hogs open slightly lower here this morning. The packers seem to have enough hogs around them for the next few days, but we see good demand for pork, tighter supplies, and we expect that we could see strength in the hog futures here as we go into the week. Resistance and support in the hogs. We got resistance at 86 and a quarter, and then support is at 83.25. Pretty wide range there, but Friday gave us a very wide trading range to set our support and resistance off of. We expect that the hogs will also get some support from outside markets, improvement in investor attitude. So look for that to be supported for the hogs early today and we'll see how that develops this week. If anybody's got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We wish everybody a very successful trading day. We'll talk to you tomorrow morning.